Hello everyone, welcome to Gold Rush Reporter, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we have the pleasure of interviewing Fabi Lara of the Next Big Rush. So, how are you doing today? I am doing really well, Dal. Well, everything seems to be up today, so by definition, I am doing very well. Thanks for having me. Yes, for sure. Yes. It seems like for me, it's like, okay, my wealth is like increasing. It kind of feels weird in some ways, but it's like, oh, this is a reality. Yeah. Finally, I was lucky enough, or maybe not lucky enough, because in my mind, it should have played out in a different manner to be part of the mini bull market that we had in 2016. And it kind of left a taste in my mouth of, okay, this is a short version of what a bull market feels like. But it didn't, have any follow-on. It just kind of died. It lasted 6 months, and it was kind of a bear trap. Now we're living what is either a proper bull market or the continuation of a bull market. You can argue that started way back in 2002. Back in the day when governments were selling gold. And then really smart people, really smart gold bugs were starting to buy gold because it was sitting at $200. And so we're living this next leg of this really exciting bull market. But now I'm invested. And it's nice to be in the industry working behind the scenes and, trying to take advantage of what's happening around us finally. Yeah, it seems like in the last few years, I've only been seriously investing in this sector since 2020. And, there were some volatile times through that 2020 period, especially with some of the uranium equities and such, as well as, gold had, ran up to $2,000 and then came back down. I think it touched 1,600,700 at one point. And just to keep operating with that conviction. I think that for me, having experienced the prior bull market, I had to really hone in on my conviction on the asset and such, and okay, let me stick it out. Let me stick out these volatile times. Let me focus on the long term. I didn't get a lot of consoling from people like Rick Rule and yourself and others, just to kind of weather those storms. And so yeah, I'm definitely appreciative of folks that have been in this investment sector longer than me. So I do want to jump into gold. Let's start there. So obviously gold has been moving. The big story has been central banks buying gold. I actually recently saw a chart where the tonnage has increased significantly for many nations, and it's outweighed the decreases in the as far as the sales of gold reserves. And so multiple things have happened since then. I saw that the Morgan Stanley chief investment officer come out and say that 20% should be allocated to gold, as well as I saw from BlackRock K. They are bullish on gold, especially in a rate cut environment. And then you also have Goldman Sachs with a $4,000 gold target. And they were saying, from what I was reading, that they really suggest allocating a percentage to commodities and especially gold. And so it seems like the sentiment is starting to shift. Are we seeing some of the big money come in yet? Or are we still waiting for that to transpire? Both. So we're seeing central banks buying and pushing the numbers up in a way that gives us confidence that this is more of a long-term play. Because thank goodness, they're not short-term traders. Otherwise, it would send all the wrong ideas to the market and they wouldn't have what they're after, which is security, right? For their own currencies and their economies. But if you think about the history of gold in people's portfolio and what that used to mean, even, back in the 90s and 80s and 70s, it was commonplace to recommend a 2% holding. And it was common for, globally, for there to be a 2% holding of gold. And that be the standard. Nowadays, that's 0.5%. And so even though we have to take a look at, okay, who are the players in the market? And what does it mean when each of them moves? So you have central banks buying, and even if central banks aren't massive purchasers of gold going forward, as long as the next player's down, meaning, big endowment funds and big hedge funds and, funds of funds in general start to buy the idea of holding just the historical norm, the standard of 2% gold. It means that the demand for gold, physical format, should quadruple from here, which, when you say that, and we're at an all-time high, around 3,700. I don't always like to say the exact number, because as soon as this video comes out, it's going to be something completely different. Especially, we're in a bull market, and so it's very volatile, 5,000, super volatile, but as it stands, we're about $3,770, and people are saying, 4,000, 5,000, 10,000 and beyond is quite normal. It's hard for us to fathom that a little coin, just over 31 grams, can be worth that much. But we also have to remember that if funds just revert to their historical norm, then quadrupling the demand for physical gold is going to be absolutely insane. Then there's the question of, okay, how are they going to do that? Are they going to do it through, paper trading and paper gold, which means you don't really need the underlying gold as much because they can, expand and contract the contracts and how much physical you need versus, the paper amount. And so there is some range of how much increase we would get, but there would definitely be an increase that would be sizable enough for us to go to over, call it 5,000 gold. Conservatively, I don't really think of that very much. I don't spend too much time trying to focus on, okay, how high can we go? I try to see more of what are the people who are buying gold doing right now, and are we going down the pipeline of, the next guys up? Are we at a level where retail guys are buying gold? Are we at a level where, we've had the run in gold producers? Have we had the stage in the bull market where gold developers are really running? And so when you take a look at everything that's supposed to happen in a gold market, gold moves, then the best producers move, the not so great producers move, then the developers move, then the exploration companies move. If you go down that, chain, the developers are still so cheap. The ones that have known gold in the ground, compliant resources, but that, aren't that close to actually mining the stuff. They're just expanding their resources. Those companies are pennies on the dollar right now by any sort of measurement. And so when I look at that, I'm like, okay, we still have some time. I don't know how long we have. And I try not to think of time in months and years. I try to think of time in a bull market as moves in price. I think that matters more because the last 3 months of a bull market, of a real bull market, are completely insane. And I think we have a very decent ways to go to the point where if people are coming in right now, I think they should be cautious. I think they should be picky on what stage of development that they go in, but I do believe that there's a lot of room yet to make really good returns. Yeah. So I'm curious in your thoughts on, so obviously you mentioned like some of the developers, they have known gold in the ground. They have proven and probable reserves.